These are 8 top stocks in pre-market with big percentage move today. Our review on MURA. Mural Oncology plc, a clinical stage biotech out of Ireland, is popping off today, up over 120% pre-market after an 85% breakout on press releases and another 30% surge into the open. The company just scrapped development of its lead drug, nemvaleukin, after disappointing phase 2 and 3 trial results. Along with that, they're laying off 90% of staff and officially exploring strategic alternatives. Everything from a sale to a merger is on the table, with Lucid Capital Markets advising. So why the rally? It's not about the pipeline anymore. It's the $144 million in cash they're sitting on. With the drug program out, Mural becomes a clean biotech shell with cash, and that makes it prime for a buyout or reverse merger. No suitors yet, but this kind of move draws speculative fire fast. It's a classic biotech pivot. One door closes and another potentially opens wide. Our review on SNYR. Synergy CHC Corporation is a consumer healthcare and beauty company that's all about lifestyle-focused products. They've got a mix of brain supplements under the FOCUS Factor brand, weight management goodies for women through Flat Tummy, and a skin-focused line called HandMD. So yeah, it's a wellness-driven, consumer-centric setup that plays in the supplements and beauty aisle. Now let's talk about this wild move today. Synergy stock is absolutely ripping, up 116%. That's not a typo. But here's the thing. Even though the stock is flying, the mood around it feels more cautious than celebratory. We're not seeing a clear press release or catalyst driving the move, which is raising some eyebrows. These kinds of low-float, micro-cap runners can spark retail attention fast, especially when momentum kicks in. But without solid news, it gets a bit speculative. Could this be early chatter around a shift in strategy, a new distribution deal, or maybe just some trading momentum? Hard to say right now. The caution is understandable. When a stock doubles in a day without clear fundamentals backing it up, people start wondering if they're riding a wave or about to get caught in a rug pull. So yeah, it's one of those classic microcap moments. Big move, lots of eyes on it, but no clear roadmap just yet. Keep an eye out for follow-up announcements or filings. This could either cool off quickly or get even more interesting if the company drops some clarity. Our review on ARBB. ARB IOT Group Limited, a Singapore-based company in the IoT space, has its hands in everything from smart homes and agriculture to full-blown IoT system development. They're building out connected ecosystems, from hydroponic farms to smart buildings, while also dabbling in gadget distribution. Think of them as a full-stack IoT enabler, trying to make smart everything a reality. Now, the stock is up 43% pre-market, with most of the momentum coming from an after-hour surge following a pretty interesting 1-2 punch of announcements. First, they scrapped a smart home project in Malaysia, citing budget constraints and tough market conditions. That kind of news usually drags a stock down, but ARB IoT quickly followed it up with something much juicier. A $53 million contract to supply AI servers to Whizzle Group. That's a big win, no doubt. And it signals a strategic shift that could open up new growth lanes in the AI and data center space, which investors are definitely paying attention to right now. But let's be a little cautious here. The company isn't giving a ton of detail yet on margins, timelines, or how this fits into their broader roadmap. Plus, walking away from a project, even for good reasons, still suggests some operational friction they'll need to smooth out. So, while this move into AI infrastructure has real potential and clearly caught the market's attention, it's worth watching how it plays out over the next few quarters. The pop is exciting, but now the pressure's on to deliver. Our review on SBEV. Splash Beverage Group Incorporated, a beverage portfolio company with a mix of alcohol and non-alcohol brands. is making some serious noise in the market right now. The company's whole model is about scooping up early-stage or undervalued beverage brands and scaling them through its distribution channels. So we're talking stuff like single-serve Copa di Vino wines, Pulpo Loco sangria straight from Spain, tap-out energy drinks, and Salt Tequila, which is their flavored take on 100% blue agave tequila. Now, the stock is up 42% in pre-market trading, and that move is mostly riding off momentum that started in yesterday's after-hour session. It looks like something under the hood is clicking with investors. There hasn't been a flashy press release yet, but sometimes with names like this, price action is the story. Could be buzz building around distribution wins, new placement deals, or just a renewed spotlight on the strength of the brand portfolio. But here's the thing. This is one of those companies that lives and dies by distribution expansion and brand traction. If they lock in new retail or regional partnerships, or even land shelf space in major chains, it can move the needle fast. That said, without fresh news right now, this kind of sharp move should be taken with a bit of caution. It's the kind of stock where sentiment can swing on a dime. Still, the move shows there's renewed interest. If they can keep backing this momentum with solid updates or revenue growth from those brands, this could be more than just a short-term pop. Want to watch closely. Our review on TMC. TMC, the Metals Company Inc., a deep-sea minerals exploration outfit, is starting to show some serious life in the market this morning, up about 26% pre-market. For anyone not familiar, TMC is all about harvesting polymetallic nodules from the deep ocean floor, specifically in the Clarion-Clipperton zone of the Pacific. These nodules are packed with key metals like nickel, copper, cobalt, and manganese. Exactly the stuff we need for EV batteries, energy storage, and steel production. The long-term pitch here is pretty bold. They want to be a critical supplier for the green transition, but instead of digging on land, they're going deep sea. It's ambitious, a bit controversial in some circles, but undeniably intriguing from a resource angle. That said, this morning's move feels more speculative than fundamental. There hasn't been a big new development out yet, at least not publicly, so this pre-market pop might just be traders leaning into the EV metals narrative again or positioning ahead of expected updates. Worth noting, the stock has seen bursts like this before when sentiment flips bullish on battery supply chains or when geopolitical issues disrupt land-based mining. But it's still early stage, and the path to revenue is long and full of regulatory hurdles, especially given how sensitive deep-sea mining is globally. So yeah, nice move this morning and definitely worth watching, but maybe don't chase it blindly. Until there's more clarity on permits, partnerships, or tech readiness, it's a high-risk, high-reward story that needs more than a good headline to stick. Our review on USAR. USA Rare Earth Incorporated, a key player in the rare earth metal space, is seeing a solid pre-market bump this morning, up 21%. The company's big focus is on creating a vertically integrated supply chain for rare earths, specifically building out a magnet manufacturing facility in Stillwater, Oklahoma. They're aiming to build out the U.S.'s domestic supply of critical minerals, which is huge, especially as industries like defense, electric vehicles, wind power, and robotics ramp up demand for these materials. Now, the 21% jump? That's largely tied to news that China is reportedly planning to limit exports of critical minerals, a move that's had a lot of people buzzing in the markets. China controls a hefty chunk of global rare earth production, so any potential restrictions there could create major supply issues for companies like USA Rare Earth. The market's reacting to the potential opportunity for U.S. companies to step in and fill the gap, especially as tensions around supply chain security and self-sufficiency grow. Of course, it's important to take a step back here. While the hype around China's move could certainly benefit U.S. rare earth producers in the short term, the long-term picture is still about USA Rare Earth scaling up its operations and getting their plan up and running. Even though today's jump is nice, don't forget they're still in the development phase, and it'll take time before they're cranking out product at the scale that would really make an impact on the market. So, it's exciting and a good reason for some optimism. But like anything in the rare earth space, it's not without its risks and challenges. Just something to keep in mind as the story unfolds. Our review on VERV. Verve Therapeutics Incorporated, a clinical stage biotech company, is making waves today with a solid 19% jump in pre-market trading. The company's all about revolutionizing cardiovascular treatments by turning chronic therapies into single-course gene-editing medicines. Their lead programs target major cholesterol drivers like LDL-C, remnant cholesterol, and LP, aiming to permanently edit genes in the liver to reduce these dangerous levels. What's driving this stock surge? Well, Verve's getting some love from the analyst community. Guggenheim recently raised its price target on the stock from $18 to $24 while maintaining a buy rating. That's a solid vote of confidence, especially given Verve's ambitious gene editing pipeline. Then, Cantor Fitzgerald upgraded the stock from neutral to overweight, adding more fuel to the fire. The market's reacting to this analyst attention, clearly excited about Verve's potential in gene therapy. But as always, the biotech sector is volatile. Verve's still in the clinical stages, so while this price bump is promising, it's important to stay aware of the risks inherent in drug development. The long-term story is still unfolding, but right now, the momentum's on their side. Our review on GMHS. Gamehaus Holdings Inc. is up 19% in pre-market trading today, and it's clear that investors are paying attention. Gamehaus, a tech-driven mobile game publisher, has been building out an impressive portfolio of games across a variety of genres, from social casino to RPGs and puzzles. They're not just about publishing games. They handle everything from development to testing, user acquisition, and monetization. So why the big jump? There's a lot of excitement around the company's potential, especially with its diversified game lineup and robust service offering that covers all aspects of the game lifecycle. Mobile gaming continues to be a massive market, and Gamehaus is well-positioned to capitalize on that. With their focus on technology-driven solutions and optimizing the game experience, it's no wonder the stock is getting a lift. Of course, with the gaming industry being as competitive as it is, this kind of momentum is something to keep an eye on. While today's pre-market gain is a good sign, investors should be cautious of the usual risks in this space. Changing trends, game performance, and user acquisition costs can all have an impact. Still, it's a positive sign that Gamehaus is seeing this kind of movement, and the market is clearly taking notice of their growth potential. Please subscribe, give the video a like, and watch more from our playlist. Thanks.